September is Life Insurance Awareness Month. Welcome in, everybody. My name is Matt Alina, and I am on the Life Markets team here at URL Insurance Group. And each week of September, during Life Insurance Awareness Month, we do these little trainings just to give you a glimpse into some sales opportunities and ways to help you spread news and spread the word about the importance of life insurance. September may be Life Insurance Awareness Month, but life insurance, it can go on year or month after month, year after year. It does so much. So this week, we're going to be talking about the purposes of permanent life insurance. For some of us who have been in the insurance industry for several years, for a long time, this is also known as cash value life insurance. But we're going to go into the purposes of permanent life insurance, and we're going to be talking about what is permanent life insurance. So we're going to talk about whole life insurance, universal life insurance, and indexed universal life insurance. Those are the three permanent life insurance products that are out there. Yes, there's also variable universal life, but here at URL, we don't handle the variable business, and that you need to have a securities license for that. So for today's purposes, we're going to be talking about whole life, universal life, and indexed universal life. What is permanent life insurance? Well, let's take a look at whole life. Whole life is the original form of life insurance. That's the original form. What whole life does is it provides lifelong coverage along with guaranteed cash values. If you imagine a bucket when it comes to permanent life insurance, and the insurance company is the bucket, the client is paying money into the bucket, and the insurance company is taking cost of insurance out of the bucket. The money that is still residing in that bucket is generating interest, aka cash value. So whole life, universal life, index universal life, they all work similarly, where they have this bucket. Client pays money into the bucket, and the insurance company takes out cost of insurance and administrative costs. The money that remains in that bucket is generating interest for cash values. The idea behind permanent life insurance is that as we get older, as your client gets older, and every day we're one day closer to our demise. It's 100% probability we are going to die. So instead of saying to the client, now that you're 10 years older, 20 years older, 30 years older, or whatever, now you have to pay higher premiums. We don't have to do that. The cash value that was growing in that bucket over the course of time offsets the increases in the cost of insurance. So during whole life, that's what people did. It provided them lifelong coverage, locked in the rate, and it provided them guaranteed cash values. Fast forward several years, another product hit the landscape, which is universal life. What's the difference between universal life and whole life? Universal life can provide lifelong coverage. However, cash values are not guaranteed. It is cheaper than a whole life policy. Sometimes you'll find that it's about half the cost. Why is whole life more expensive? Because it has two guaranteed components. It guarantees a death benefit as long as the client pays the premium. It guarantees the cash values as long as the client pays the premiums. Universal life says, okay, with interest rates, the client can get some cash growth, but we're going to guarantee one thing, which is the death benefit. So with a universal life policy, it's providing basically a lifetime term coverage in a lot of situations. Now, some people wanted that lifelong coverage. They didn't want to pay the higher expenses of whole life, so they came up with indexed universal life. Indexed universal life is the cousin of universal life, or the step brother or stepsister of universal life, where it can provide lifelong death benefit coverage, locked in rates, but the cash value component, the money that's growing in that bucket, grows over time, and is tied to the performance of market indices. The cash values are not guaranteed, but over the course of history, the cash value does grow. We'll get into some of the functions of what cash value can do for the client and what these policies can do. So Index Universal Life is one of the newer forms of permanent life insurance out there. So what's the difference between Universal Life and Index Universal Life? Universal Life, typically when a client pays premiums, the insurance company is taking that money and investing it. For Universal Life, typically it goes into the bonds. They invest it in bonds. For the Universal Life, they're buying they're taking that money and investing it into the different market indices. The S&P 500 is one of the more popular choices, where it starts in the beginning of the year to where it ends. If it's up, the client gets money. If it's down, the client doesn't lose any money. They don't gain any money either. So those are some of the differences. That's what permanent life insurance is in a nutshell. So what is lifelong protection? Permanent life insurance. What is lifelong protection? It is coverage for life, which ensures that the death benefit protection that the client cannot outlive. Benefits are paid regardless of when the insured passes away. This is one of the more, it's popular. People will purchase a term policy, but it's kind of like playing a little bit of roulette, where they may die in that 10 to 30 or 40-year window, but they may not. With lifelong protection, they're guaranteed that benefit is going to be paid out as long as the premiums are paid. So again, it provides death benefit protection that the client cannot outlive. Regardless of how old they live, whether they die at 75, 85, 105, 115, it doesn't matter. The coverage is there. Benefits are paid to the beneficiary. It's ideal for clients with lifelong dependents. Maybe they have special needs children, or it's also great for estate planning needs. You don't have to have a large estate to need that liquid cash that can come from a life insurance policy to help pay legal fees, pay estate taxes, inheritance taxes, all of that. Instead of having family members dip into their own pockets to settle mom or dad or grandma or grandpa's estate, you can use the cash value from that, or not the cash value, but you can use the death benefit from the policy to handle some of those estate planning, those estate taxes, some of the stuff that Uncle Sam wants, along with other legal fees and stuff like that. Let's talk cash value accumulation. Whole life policies, mentioned this before, I'll say it again. Cash values are guaranteed. It's one of the most expensive forms of life insurance because it is guaranteeing those two functions. It's guaranteeing the death benefit and it's guaranteeing the cash value. They have to charge the premium that they're doing or that they're charging, especially if the market is in a down, if it's in a down market. If it's in an uptick, it's gravy for the insurance company. But they have to be able to hedge against the ebbs and flows of the markets, of the investments that they make. Indexed universal life policies, cash values are not guaranteed. One of the nice functions about an index plan is that you have the ability to sit down with your client, have a conversation with them, and you may see, okay, the S&P 500 isn't performing as well. We can move some of that to the NASDAQ. We can move that into different market indices. So you can kind of spread it around a little bit so that when one market's doing well, maybe another market's not doing so well, it kind of balances each other out. So what are some of the benefits of cash value? That money that's sitting in that bucket. That money grows tax deferred. So all that cash, that interest that's there, that it's growing over the course of time, Uncle Sam's not touching it. It grows tax deferred. Your clients have the option to either borrow against it, take a loan from that cash value, with the intention that they can or they may or may not pay it back, or they can withdraw that money where they don't pay it back for various needs. Permanent life insurance, I like to use it like this. It provides death benefit protection during a person's accumulation years while they're working. They've got children, they have a mortgage, they have a lot of financial responsibilities. As they get older, kids move out, they pay off their house, they don't have as much debt. Now they can use the cash value that's been growing to supplement their retirement years. So cash value in a lot of these policies can also be used to supplement the retirement. The other thing that cash values will do in a life insurance policy is it can act like a rainy day fund. It can help protect against medical expenses, or someone needs to get a new roof, or I've had clients that have used the cash value to pay for their children's weddings. There's so many different functions. The money, the cash value that's in that policy is the client's while they're alive. When they pass away, that money goes back to the insurance company and the death benefit is paid out. There are some ways that you can structure a policy that they can get both the death benefit and the cash value in a policy. I've also had clients, by the way, that have used the cash values to pay back student loans, or to pay for a child or a grandchild's college education. There's so many functions for what a cash value policy can do. A permanent life insurance policy also has the ability to leave a financial legacy. What it does is it helps clients leave money to their heirs. As I had mentioned before, a permanent life insurance policy, whether it's whole life, universal life, or indexed universal life, it is guaranteed to pay out. Term policy, not so much. They could outlive the term. They may be without insurance. But with a permanent life insurance policy, they now have they know that that benefit is going to be paid out at some point. So that money can leave a financial legacy to their heirs. It can help fund a life insurance trust to manage and distribute wealth. And it can provide the beneficiary tax-free money to cover all the costs of settling the estate and other final expenses, funeral expenses, medical bills, whatever the case may be. It can also still work as income replacement for a surviving spouse. Let's talk a little bit about the investment component of a permanent life insurance policy. We talk about it as cash value life insurance. The investment opportunities. It offers a unique way to diversify and investment strategies. Index universal life policies are tied to the market indices. We've covered that. You may have heard of some really savvy investors like Warren Buffett, and there's so many other people like that are multi-billionaires. I guarantee you that they all have life insurance, a cash value life insurance policy to help diversify their investment strategies. I had heard a statistic not too long ago that 77 cents of every dollar that is spent in the United States has passed through the fingers of an insurance company. Let's talk about some of the other purposes of permanent life insurance. It can fund for business owners. It can fund their buy-sell agreement, where you have two business owners or three, it doesn't matter how many business owners, and it helps fund that buy-sell agreement. There's a cash value. There's an exit strategy. Should one of the partners decide to get out, now they can get some of that money back and walk away. Again, it could be a pension, an opportunity for like a pension maximization, something like that. It also helps business owners keep and retain key employees, and also recruit key employees. Some of the top college football coaches out there, Michigan and a few others, they do um, these life insurance policies that build cash value to help with as an incentive to bring them into their organization, into their school, to be their head coach for football or whatever sport it is. It's another incentive. There's also the terminology golden handcuffs, and this is where an employer provides coverage on top executives that rewards them for their loyalty. Basically, there's a death benefit there that can help the employer with finding a suitable replacement, or it can be used for the employee if they die to protect their family. But it also says, okay, if you give us 20 years of service, of loyal service, and you help us grow, all of that cash value that's there, it becomes yours. And it can be used as a retirement supplement. Again, a way to keep and retain key employees. Last but certainly not least is covering final expenses. Final expenses isn't just, casket, funeral, cremation. It is and a lot of other things too, whether it's unsecured debt or debt that's tied to the house, pay off any liens, medical expenses. The list goes on and on. So it can cover final expenses. We're going to get into greater detail on what final expense life insurance can do and the multiple functions of what a final expense policy can do. But to summarize, permanent life insurance, whole life, universal life, index universal life, it provides lifelong protection. It is guaranteed that it's going to pay out a benefit at some point. Cash values are there. There's an investment component that is there for the client to utilize as a way to supplement retirement, rainy day fund. It provides your clients the ability to leave a legacy. Multimillionaire and billionaire people aren't the only ones that want to leave a financial legacy to their heirs. Even the average Joe, the average Jane would love to be able to leave a legacy of love to their children, their grandchildren, and future generations. These permanent policies can provide the clients the ability to do that. It also offers business owners a way to recruit and retain key employees, key executives. It offers business owners a way to fulfill a buy-sell agreement. So here's a little call to action for you. It's Life Insurance Awareness Month in September, but you can keep this going on October, November, all the way into the new year and beyond. Present permanent life insurance as an option to your clients. Show them a term policy if they're asking for term, but then show them some of the features of what a permanent life insurance can do for them. For just a few dollars more, this is going to be guaranteed to pay out. Term policies terminate. Contact us here at the Life Markets team for your case design, quotes, other marketing resources. We love helping you. It's a privilege to help you and help your clients. We say we're in the people business. Put us to that task. And we can also get you additional resources that can also be found on our website. So that's a glimpse into the purposes of permanent life insurance. If you have any questions, comments, if you have any case design needs, call me, call my colleagues here at URL. My direct line is 717-216-8041. Keep spreading the importance of what life insurance can do for families. We've been in this business long enough to know what it looks like when people have life insurance and when people don't have life insurance. Help continue to spread that peace of mind and continue to utilize the resources and all of us here at URL to help you grow your business. Thank you for your time. Enjoy the rest of your week, and Next week, we're going to be talking about the multiple functions of final expense life insurance. Don't miss it. We'll see you next week. Take care, everybody.